So we continue and we will start the notes to the balance sheet. The first one that we have, we go one item at a time and we add them as and where they belong. Share capital, we have 19,80,000 shares of rupees 10 each. All these amounts are in lakhs. Okay. We of course have only the current year amounts, and what we can do here, just like in the previous problem, is we will shift this and we will make this the final column, and this we will just use as the inner column to do all our calculations. Okay, so share capital, you're not given anything about authorized and the bifurcation, so we just have paid up capital. So it is 19,80,000 shares of rupees 10 each. Okay, and what you have here, since we don't have any other additions or any other adjustments to be done, we can just write the amount here. 1 lakh, it is 198 lakhs. Okay, I will write the decimals since we have a lot of items that have decimal amounts. Okay, so this final column highlighted, underlined, and this will go to the balance sheet. Final amount that goes to the balance sheet. Statutory reserve given in the problem 231, and then of course no percentage is mentioned as to how much to transfer, but we know that it's sort of a default thing that 20%, if nothing is mentioned in the problem, 20% will be transferred to the statutory reserve. Okay, so this statutory reserve given to you is the opening balance. We write it here 231.00, and how much to transfer the current year, we will see it accordingly when we do the working notes. Okay, now net profit of the current year before appropriation is 150, and net profit or the profit and loss account balance brought down from the previous year is 412. So as we know, in order to calculate total profits, we have to do this working note. We have to show this one part of the profit and loss as to how we have arrived at the total profit and loss figure. Okay, so like it said in the problem, profit and loss for the current year is here, net profit before appropriations, which is 150. I'll write it here. And profit and loss account of the previous year, meaning the balance of profit and loss which has been brought forward, is 412. Correct? So 150 plus 412, total profits made during the year 562. Last year's profit plus this year's profit. Now how much remains from that, we will look at it in the transfer or in the appropriations. Okay. Although nothing is mentioned in the problem, we consider 20% as our normal transfer to the statutory reserve. So you need to calculate 20%, but only of the current year's profit, not of the total. This is only current year statutory reserve, isn't it? So take the profit of the current year, 150, and 20% of that would be 30. Okay. Now how much to carry forward to the balance sheet? How much of profit will remain? Total profit is 562. We always write this total first. Whatever remains is the balance. So 562 minus 30, you have 532. This is what we are going to transfer to the balance sheet. Okay. So let's do that now itself, as well as transfer the current year's statutory reserve. That is 30 lakhs. Okay. So current year statutory reserve is 30. We'll do this adjustments now itself since we have all the information without any additional calculations required. So final amount, that is the reserve after adding the current year's reserve to the previous year, what we get in the inner column is 261. Okay. Similarly, balance of P&L account, like I said, remaining is 532. Transfer to balance sheet is 532, and we can transfer that over here. Done. So the total, we can put it in the outer column just to distinguish, just so that we find those amounts very quickly, very easily a little later. We are going to add this over here. So 261 plus 532 gives us 793. Done. So these two, reserves and surpluses and the share capital, first two schedules are done. Next, let's start posting the rest of the amounts. What do we have here? Fixed deposit account 517 in a column, I'll write. Then savings deposit account 450, and current account credit balance, that is of deposits, that goes under schedule 3, is 520.12. Okay, 520.12. So again, how much do we get as a total of the deposits is, just again write this in the decimal form as much as possible. Try to follow. Yes, okay. So total of the deposits that we get, we will write it in the outer column, 1487.12. Okay, so all the three deposits give us this total. Next is bills payable. I'm going by this order and not exactly by this. Okay, so we write one item at a time. Bills payable under other liabilities and provisions 0.10. No other item, so I'll write it directly outside. 0.10. Then cash credits, next is cash credits, going in this order, 812, and we said cash credits go to 9, schedule 9, right? So over here it is 812. Done. Then borrowings from other banks, under our liabilities, borrowings from other banks, schedule 4, amount is again directly outside, 110.00, 110 lakhs, borrowings from other banks. Okay. Then cash on hand, cash with RBI 6, schedule 6, over here. Let's see the amounts, 160.15, and cash with RBI is 44. Cash with RBI is 37.88. Now, before we jump to this amount and before we transfer it, we also need to consider the cash reserve ratio we are going to calculate later. Okay, and we will do that a little later. But for now, we keep this amount on hold because cash with RBI means nothing but the cash reserve, right? Some amount of money which the bank keeps with RBI, or it keeps it aside, and it doesn't, RBI doesn't allow you to give that percentage of your money in the form of loan. So you have to keep it aside. So this cash with RBI amount has some adjustment as to how much of cash reserve we are supposed to maintain during the current year. So we'll see whether this 37.88 is a correct figure, and if there is more to be added to the reserve, we will do it in the working mode. Okay. Then cash with other banks and money at call. So balances with banks and money at call and short notice is over here. Schedule 7. So what amounts do we have? 155, sorry, I think there is some error over here. Okay, again, this is also something that we are going to do through the working note. The cash with other banks will also be done along with the working notes. Okay, so we leave that. Money at call is what we are going to enter. That is 210.12. 210.12. We will come back to the cash with other banks. Then the gold and government securities. Gold is 55.23 and money at call is government securities is 110.17. So these are these two amounts. Again, when you get them outside, you have 165.40. Okay, so this done. Advances, again, let's see what other items are here. Premises and furniture. Premises are, you've been given the final amount for premises, that is after charging the depreciation. Okay, so 155.7 and your 70.12. These are amounts that are given after depreciation has been charged, and how much depreciation is charged is given in the working notes. 110 lakhs, okay, and 78,000. Done. So we'll transfer these. In case of premises, we'll write the depreciation amount, that is 1.10 in case of premises, right? Premises is 1,10,000, so 1.10 lakhs, okay? And this is the depreciation. So we need amount before depreciation. So how much will it be? After depreciation amount is 155.70. That is here the before depreciation, after depreciation amount. To that, if we add the depreciation, we get the final amount, which I will put here. So this would equal 156.80. Okay, so we are showing what was the written down value before the depreciation was charged. So reverse calculation here, the amount after depreciation, add to that the depreciation, and we have the written down value. So depreciation amount charged, once again we deduct the same 1.10. Okay, so what we have outside in the outer column is the amount that was given in the problem itself, 155.7. all right, after depreciation amounts. Similarly, with the next one, furniture, we also have amount given after depreciation. So that amount 70.12. To this, if we add the depreciation back, that is 78,000, which means it's 0.78, we will have 70.90. Okay, so we are basically getting the value that was before depreciation. Again, depreciation amount 0.78. Final total in the outer column, that is value of the furniture, 70.12. Okay. Total of both the assets, both the fixed assets, 225.82. So again, another schedule complete. Okay. Any other information? We have the last one, that is the term loan, which is Schedule 9. So Schedule 9 advances over here. Once again, we will have 792.88. Now, current account balance, the debit balance we have not yet entered. So the overdraft of this current account, we've taken this under Schedule 3, deposits. So overdraft under Schedule 9, this will be 28.10. Done. So again, advances total, we can get it in the outer column so that it can be transferred later. This is 1632.98. 1632.98. Okay, so whatever information was given in the table is now complete. We have transferred it, we have posted it in all the respective schedules. We can also transfer these bills for collection and contingent liabilities, and we can maintain it in the balance sheet. Okay, so bills for collection 18,10,000. If you reduce the amount to lakhs, you will have 18.10 for bills for collection. Same way, contingent liabilities, we'll prepare the schedule first, the notes. Acceptances and endorsements are 14.12, and claims against the bank not acknowledged as debt is 55,000. So this will be 0.55. Okay, total amount once again of the contingent liability is 14.67. We can transfer this to the balance sheet, or we can transfer all of the schedules at once we have completed all the notes. Okay.